Hello and welcome to another update video about Ether. We take a look at the daily time frame, start here in June 22. Preferred interpretation is that we have a 1-2-1-2 setup and another 1-2 formed, which means that all of these waves here to the upside should unfold towards the 8K region. There is another interpretation in which this ends as an ending diagonal. Then it will just be a bit more choppy. I think we'll figure that out along the way. It wouldn't be bearish. But if certain levels break and if we see pullbacks where we would normally not expect them, we might be dealing with a larger ending diagonal. We'll see if that happens. I can certainly see that happen in a scenario in which Bitcoin might give us a deep B wave pullback. I don't know if you know the Bitcoin video and Bitcoin scenarios, then this is also something that might be an option for Ether. But for now, Ether seems like a more aggressively bullish chart. And it certainly has turned into one, especially with the recent breakouts, the shallow circle wave 2 here that didn't even touch the 38.2 retracement level. So very, very shallow wave 2 pullback breakout. And we might be in this circle wave 3, which might reach the $3,500 level next, because it's the next resistance structurally. Yeah, there isn't really any other structural resistance level along the way. Okay, so also, if we look at Fibonacci extensions, I take the length of circle wave 1, go to the low of wave 2. And there you go. Takes us to around about $3,600 plus in the 1.236 extension. That's sort of the absolute minimum expectation for a third wave. Better, the 1.38 at $3,800 roughly. So if micro support levels are holding, the price should move in quite a direct fashion towards that area. Okay, so now we go to the 1 hour chart, because it tells us which levels need to hold to keep that a likely option. Obviously, problem I have with this entire move since the 8th or 9th of December is that this wave 2, which is circle wave 2 on the daily chart, is that this wave 2 was so shallow. Yep, it was substantial enough in terms of as a sideways correction. So it turned into a running flat, which is rare, especially in a wave 2, it's rare. Now it can happen in a very bullish market, because these overshooting corrective waves, in this case an overshooting X wave that you see there on the chart in white, these only occur really in bullish markets, or mainly occur in bullish markets. So while it is a little bit unusual in a wave 2, it would all fit into the idea that Ether can get to 8 to 12K in the bull run and that we are already in a bullish market. However, that obviously means we still need to be on the side of caution, because it's not typically the most common pattern that forms in a wave 2. Typically we see a sharp correction in a wave 2. Wave 2s are normally there to scare people out. We've then seen a rally, quite a surge from this low that was formed on the 3rd of January. It's only a 3-wave move up so far, and it's not an impulse, it's only a diagonal if it forms 5 waves. That means we have to use a support area that goes down or allows for a pullback to the 61.8 retracement. And that level is at 2,362, which means that this wave 4, so from this January low, we have a wave 1, we have a wave 2, we have a wave 3. This here is probably wave 4, could already be done. And then wave 5 should unfold as like this to the upside. Whereas actually I just realized it's of course not correct actually. It's a diagonal. So it should be something like A, B, C. Yeah, no, that's actually correct. This ABC can always turn into a larger ABC pattern. So A, B, C, this is actually how it should unfold. But, this is not really predictive, because the rally from the lows on Friday is only corrective. So we just have to wait and see if a higher low forms. What's more important is really to see if the $2,362 level holds, because really a break below that level will mean that, this idea isn't going to work out, that we are probably, at least from what we can see, that we're probably not yet in this third wave on the daily chart, but instead we might fall back in a wave 2. That doesn't mean we go down into the green zone, because this peak would be an overshooting B wave. And then the C wave down, which is highlighted in yellow on the 1 hour chart, would not necessarily be able to get to the green support area, because the C wave and the A wave, they have a certain, length in common typically. And if the B wave overshoots that much, the C wave might not even go below the A wave low. So it's going to be a very complex structure if we lose the $2,362 level. But for now, we're holding it. So let's see if the C wave to the upside in wave 5 starts from this area. Again, a B wave can also turn into a triangle. We have to be a bit flexible with these corrective patterns. Really, the micro count isn't really very helpful here. What really helps are the Fibonacci levels. We've got 2,489, 2,425, and 2,362 as support. And then to the upside, obviously, the next resistance level to take out is 2,590. And above that, 2,700 roughly, for these two swing highs. And then as a target for wave 5, the area around 2,764 to 2,842. Yeah, that's my update about Ether. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.